Hi, I'm Mark Boggart, the CEO and co-founder of Seraphim Space, the manager of the investment trust, here to talk to you today about our third quarter results. Like many pioneering technology companies, the Seraphim Space Investment Trust and its listed holdings were not immune to the broader worldwide sell-off of technology and growth stocks, precipitated by rising interest rates, global energy prices, high inflation, and the developing conflict in the Ukraine. However, we are increasingly optimistic about the company's prospects. The fundamentals for the space tech market opportunity remain robust, whilst the SSIT portfolio still shows a 10% uplift versus cost as at the 31st of March 2020 for the quarter. Meanwhile, the role in space tech in addressing some of the world's most urgent problems has never been greater. As well as addressing climate crisis, the sector is now playing a crucial role in helping combat Russian aggression in the Ukraine, with several of the SSIT portfolio companies at the forefront of these efforts. So this page lays out the highlights for the quarter. So the share price to the 31st of March was at £1.05. And the NAV per share at £1.04, representing a 6% increase since IPO. Net assets of £250 million and market capitalisation of £251 million, with liquid resources of 62 million, which is 25% of NAV. The portfolio fair value stands at 10% of costs, and we completed 4 transactions during the quarter with a total cost of £6.5 million, and that increased the portfolio to a total of 23 companies. Post the end of the period, we concluded 2 further investments, 1 follow-on investment and 1 new investment, deploying further cash of 2.3 million. This slide is just to remind you of the investment case for space, a $1 trillion market opportunity that Seraphim Space is at the forefront of. And we're seeing a significant proportion of the global deal flow in the space domain each month. So low-cost launch is key here, and it's being driven by the activities of, first of all, SpaceX, driving down the cost of per kilo into space. But behind SpaceX, there's a further 150 rocket launch companies that are collectively looking to drive down that cost of access to space. That's one side of the equation. The other side of the equation is the revolution that's happened in recent years in the satellite industry, where satellites are now miniaturized to the size of a microwave or the size of a shoebox, but they have much of the same functionality as their traditional, much larger and more costly satellites. So bringing these two things together, low-cost launch and low-cost miniaturized satellites, it means we're now able to put constellations of hundreds or even thousands of satellites, creating a digital infrastructure in the sky. This space platform will drive societal change, and it will catalyze many of the megatrends that are already underway in climate, connectivity, mobility, IoT, and smart cities. It's also worth noting that this revolution is underway, but we remain in the foothills, with less than 3,000 satellites operational today, where 80% of those were launched in the last 3 years. Over the next handful of years, private companies will launch tens or even hundreds of thousands of satellites, addressing this $1 trillion market opportunity that will ultimately help our planet address some of the biggest climate and sustainability issues. So now let's look at the results, starting with the highlights. So the strong premium since IPO has given ground during 2022 as the global stock market sold off growth stocks. And as the chart shows, SSIT share performance is aligned with the NASDAQ as adjusted to sterling and with the FTSE All Share. On the 31st of March 2020, the share price was £1.05, a small premium to NAV, with a market capitalisation of 251 million. NAV per share was £1.04, which is 6% increase based on the 98 pence cost after expenses. The portfolio is valued at £188 million, with net assets of £250 million, including £62 million of cash. So the attribution analysis table, the value of the portfolio increased from 182.8 million to 187.6 million during the period. A total of 6.5 million of additional capital was deployed, split between 2.5 million in new investments and 4 million into follow-on investments. The 6.1 million fall in fair value was primarily due to a combination of the reduction in the value of Arctic Quantum, which fell by 16.7 million, which was partially offset by the uplift in the valuation of D-Orbit, which was up by 11.4 million. Whereas the decrease in the value of Arctic Quantum Holdings, which is listed on NASDAQ, was due to a fall in its share price over the period, the write-up in D-Orbit was based on the analysis of a number of comparable listed companies across a range of different financial metrics. This valuation process is in line with our policy for valuing unquoted investments in accordance with the published industry guidelines. The 4.4 million gain on FX over the period was a result of the weakening of sterling, and factoring in this FX gain this resulted in an overall change in fair value of minus 1.7 million pounds during the period. Next, to review the NAV bridge. The NAV remained largely unchanged over the period, 249.6 million versus 250.6 million as the opening position. Besides the 1.7 million pound reduction in fair value of the portfolio, other contributing factors were management fees and expenses for 1.3 million, a reversal of the previously accrued performance fee of 2 million pounds as a result of the NAV now falling below the 8% hurdle rate. NAV per share reduced slightly during the period from £1.05 to £1.04. So this is the portfolio, and I'll just draw out some highlights from this slide. So the top 10 companies accounted for 68.3% of NAV, and the balance of the portfolio, where we consider much of the fair value future will come from, is 6.9% of NAV, and cash accounted for 25%. The donuts on the left-hand side paint a picture of the portfolio. In relation to stage, the majority is in Soonicorns. These are companies that we believe will become unicorns over the next 2 or 3 years. Ecosystem, the majority is invested into platforms, the constellations. These are the emerging category leaders that are building out this digital infrastructure in space. On the geographical split, it's 38% UK, 22% US, and 34% EU. And then finally, the last round, which provides an understanding of the maturity of the portfolio. 67%, 2/3 of the portfolio was invested in B series or later stage companies. And actually 47% is in D series or later stage companies. So this slide gives an overview of the investment activity during the quarter. Slower activity in Q3, although transactions were completed, doesn't provide a full picture of our activity. One US company that we undertook extensive due diligence with during the period had a sudden surge of customer demand during our due diligence exercise. Growth literally went off the scale, and as a consequence, management had to pull the transaction whilst they coped with this massive outperformance. We hope to get this transaction back into the pipeline next quarter. On top of that, we had 2 other growth companies in due diligence during the period that have gone across the period end, and we expect both of those to conclude during the current quarter. So actually, during the quarter, we completed 4 transactions, 2 new investments, one in India and one in the US, and 2 follow-on portfolio company investments in the US and in Israel. So this is our new investment, Pixel. It's our first company, which is based in India, and we invested 3 million of a 25 million A series led by a climate investor called Radical Ventures. So Pixel has a high resolution, a 5 centimeter resolution hyperspectral payload on their low-cost satellite, which they've uniquely miniaturized to fit onto a very small satellite structure. So conventional optical imagery identifies 3 bands, red, blue, and green per pixel, whereas hyperspectral splits these bands into more than 400. And this provides a unique spectral signature which can detect minute changes of chemical and biological composition from space. So due to its unique nature of chemical analysis from space, this hyperspectral data can play a very significant role in the detection, the monitoring, and the reporting of activities that contribute towards climate change. Applications include monitoring methane emissions, quantifying carbon sequestration, and the monitoring of disease outbreaks across cropland. In mining, more stringent ESG standards are being implemented, where hyperspectral data will be key to cost-effectively managing their asset and portfolio. In oil and gas, companies could use this spatial resolution fine data to locate pipeline leaks and emissions. So Pixel Constellation is designed to provide global coverage every 24 hours with the aim of detecting, monitoring, and predicting global issues. Pixel's low-cost platform unlocks a range of novel environmental and sustainability issues where there are opportunities in agriculture, oil and gas, mining, and environmental agencies who will use this data to analyze in near real time. Next of all, I'll talk about the 2 follow-on investments. So first of all, Spire. So Spire operates one of the world's largest satellite constellations. They collect radio frequency signals that are used for weather forecasting and for tracking all of the boats on all of the oceans and all of the aeroplanes in all of our skies. So Spire completed its SPAC merger in August 2021. And despite reporting impressive recurring revenues, their ARR was 70.8 million last year, an increase of 96% versus the previous year. The Spire enterprise value has fallen significantly. Now it's now down to valued around $200 million. Now this is equivalent to the valuation that Seraphim originally invested back in 2017. So as a consequence of this, the trust has invested through the market, investing a further 2.5 million, acquiring shares on the New York Stock Exchange, building our stake in a business where we've got unique insights, we've got confidence in management and its commercial capability, and we have a belief in the medium-term outlook for this business. Next of all, we've got EdgyBees, an Israeli company. They've developed an AI-powered augmented reality platform that uses satellite or drone video in order to create real-time information overlays over any video stream. So to make use of all the videos that are being generated, operators first need to understand where they are looking at. The existing solutions for overlaying such geospatial information on top of video and imagery, they lack both the accuracy and latency required for making real-time decisions. EdgyBees empowers defense, public safety, and critical infrastructure operators to understand any operational scene instantly. SSIT invested $2 million as part of a $8 million internal round to further develop satellite capability that's got groundbreaking potential to standardize imagery from any source, enabling the use of algorithms to run across much larger data sets. So this is my final slide. So although listed space tech companies, along with the listed technology companies in general, have seen their share prices fall in recent months, activity levels in private capital markets have remained very high. The last year has seen a steady increase in the number of privately financed space track transactions in each quarter, with more than 12 billion invested during the 12 months to the 31st of March 2022. These trends have been reflected in recent portfolio performance, with the reductions in the value of the listed holdings being offset by gains in the private holdings. We're confident that our holdings will continue to deliver against their very significant opportunities that the space sector presents. However, post the period, Arkit has seen a further substantial fall in its share price. As with Spire Global, we're committed to this business and where we committed a further capital during the period, we continue to believe in the long-term prospects for Arket and hope that its share price will recover as it delivers against very significant opportunities that it's aiming to address. In terms of outlook, we remain very pleased with the performance of the company and its portfolio. Since IPO, we've deployed a total of 142.3 million into 14 companies through a blend of cash investments and additional share issuances. The trust positive uplift for the period is reflected in the strong underlying condition of the portfolio. Most of the companies are well capitalized and tracking positively against our expectations. And with capital reserves of 62 million, the company is well placed to continue delivering against its objectives. Activity levels. Notwithstanding the ongoing market turbulence, investment activity has remained high. Terms have been agreed on several new investments, which, subject to the satisfactory completion of their due diligence, are expected to complete during the current quarter. Areas of current focus include businesses focused on climate, environmental, and sustainability related applications, and with the recent investment in Pixel being a notable example. Fundraising activity within the existing portfolio remains high, with multiple different follow-on transactions also at an advanced stage. We expect to continue to expand the portfolio over coming quarters, but we're also remaining mindful of the ongoing future requirements of the existing portfolio. Finally, I'm delighted to report that we've got a new venture partner that's joined us on the 1st of May. Patrick McCall is engaged to provide advice and counsel to the SSIT portfolio companies. He was previously the chair of Virgin Galactic and Virgin Orbit, having spent 20 years working with the Virgin Group. We're thrilled to have him working as part of the team. So that concludes the update for our third quarter. Thank you for listening.